Hello, we are the Brown Group, and we have been given the task of showing Paul and Pete of Bears R Us why an S-Corporation might be the best option for them. Before we get started, I would like to give you a little background information on Bears R Us. Bears R Us is a partnership that was formed between lifelong friends Paul and Pete. Paul and Pete both studied wildlife biology together at college and have a passion for the outdoors. They created Bears R Us for understanding, appreciating, and protecting grizzly bears. Last year alone, over $1 million went through Bears R Us. Because of their great success, Paul and Pete would like to take Bears R Us to the next level. We, the Brown Group, believe that an S-Corporation might be just what they're looking for.
S-Corporation, superior to all the rest for restructuring your small business. S refers to an IRS code section. It is a selection an entity can choose to determine how their small company will be taxed. This choice has nothing to do with how the company is run on a daily basis. Any business that is looking to expand from a sole proprietorship, partnership, or an LLC should consider the wonderful option of the S-Corporation. Subchapter S of Chapter 1. S-Corporation, the smart choice. Compared to the others, S-Corp is the premium choice for your business because in partnerships and sole proprietorships, you are responsible for all of the taxes and obligations of the company. And the C corporations are taxed both on the corporate level on the net income and on the distributed profits of the shareholders. On the next slide, I have drawn up a few comparison charts for you to see. S corporation is the superlative decision. This pie chart is based on federal income taxes in comparison to the S-Corp. First, we'll look at the C-Corp. It's taxed on income level and the shareholders are taxed on the amount they receive. So we know that they do have to pay taxes. And of course, when you pay taxes, your take-home is a little bit less than what you want it to be. And when we look at the LLC and compare it to the S-Corp, we notice that the LLC actually has to pay more taxes because they actually have to pay self-employment taxes as well as the 15.3%, which is standard for Medicare as well as Social Security. But again, we look at those two charts in comparison to each other, and now we will compare them to the S-Corp. Here's the S-Corp. The S-Corp can consist of one member and be taxed as a sole proprietorship or a partnership. In the S-Corp, you're paid in two forms of income, as an owner and an employee. The salary that you receive is taxed at 15.3% tax, which goes towards your Medicare and your Social Security. But the dividends that you receive are not subject to the self-employment tax. Which means, when you look at the chart, we've added the dividends, which I said were not taxed by the self-employment tax. We look at the amount of wage tax that's being paid. It's significantly less compared to the others. And then most importantly, we look at that take-home. Woo, you'll be rolling in it. The S-Corp does not pay federal taxes at the corporate level, and profits and losses are passed on to the shareholders, who apply them to personal income tax. Like I said, you avoid double taxation, which means you bring home more money. The advantages to the S-Corp that makes it a great option for Bears R Us is that it has legal protection for any personal liability, non-fraudulent of course. There are operational advantages that we covered earlier, and losses can be passed on to the investors. There is no double taxation. S-Corporation, the splendid choice. There are some IRS rules that I'd like to go over with you. You're only allowed one class of stock, and the company cannot go public. And no shareholders can be in other corporations or partnerships or LLCs. And you must have fewer than 100 shareholders, and the shareholders must be citizens and legal residents of the U.S. And you can't participate with any foreigners or foreign businesses in other countries. But you must file a separate tax return from the company and file your own personal income tax. And you must pay payroll tax and file quarterly reports. And you must take a reasonable salary according to federal regulations. The great thing is, if you follow all of these rules, your company can remain an S-Corporation, and you can keep your freedom and the money rolling in.
I'm Joshua Santillian, and I will be picking up the presentation from this point. In order for Peter and Paul to turn Bears R Us into a subchapter S-type corporation, there will be formal filing requirements for this new structure. Along with the necessary filing requirements, Peter and Paul must also ensure that they meet the criteria for being taxed as an S-type corporation. According to Henry Treisman, these criteria are: the corporation must be domestic. This is true so long as Peter and Paul do not extend their reach too far beyond what they already do. The corporation cannot be a member of an affiliated group of corporations. Peter and Paul also have met this requirement. The corporation can have no more than 75 shareholders. Shareholders must be individuals, estates, or certain trusts. Shareholders must be citizens or residents of the United States. The corporation cannot have more than one class of stock. Peter and Paul should be sure to follow all of these rules in order to keep their status as a subchapter S-type corporation once they have filed. Failure to comply with these rules will damage their status as a subchapter S-type corporation and may lead to unwanted tax scenarios. The Articles of Incorporation, also known as the corporate charter, is the governing document of a corporation. According to the Revised Model Business Act, or the RMBCA, the Articles of Incorporation must include the name of the corporation, the number of shares the corporation is authorized to issue, the address of the corporation's initial registered office, the name of the initial registered agent, and the name and address of each incorporator. This corporate charter must be drafted, filed with, and approved by the state before the corporation can be officially incorporated. In addition to drafting and submitting this corporate charter, Peter and Paul must file a Form 2553 with the International Revenue Service, or the IRS, in order to become an S-corporation. Although Peter and Paul can decide to eventually turn Bears R Us into a subchapter C-type corporation, such a decision would bar them from reverting to status as a S-corporation for 5 years. Beyond the essential documents for creation, such as Form 2553 and the Articles of Incorporation, Peter and Paul should consider other documents and written agreements upon the formation of a S-corporation in Bears R Us. One example of this is drafting corporate bylaws. Bylaws govern corporation and bring more detail and instruction than the Articles of Incorporation. Although these bylaws do not have to be filed with any government office, Peter and Paul would be wise to set them in stone so that Bears R Us continues in the direction they dream it. Bylaws are binding on the directors, officers, and shareholders of the corporation, and may contain any provision for managing the business and affairs of the corporation that are not illegal or inconsistent with the articles of the corporation. The shareholders of the corporation have the right to amend bylaws, even though these same bylaws may also be amended by the board of directors. If Peter and Paul choose to bring more people on board with Bears R Us, they can choose to issue them authorized unissued shares. At any time, Bears R Us can repurchase these shares in order to allow participants to depart. These repurchased shares are known as treasury shares and cannot be voted by the corporation, nor do these shares pay dividends. However, these treasury shares can be reissued by Bears R Us.
Hi, my name is Tasha, and I will take over the presentation from this point forward. According to our text, a S-corporation pays no federal income tax at the corporate level. Just like a partnership, the S-corporation's income or loss will go to the shareholders' individual income tax returns. Essentially, a S-corporation is a pass-through entity. This means that all the income flows through the company to the individual owners or shareholders. This will help the S-corporation from being double taxed like a C-corporation. As we learned in the previous slide, a S-corporation doesn't pay federal income tax at the corporate level. However, a S-corporation will still file a tax return based on the company's losses and profits. Therefore, the S-corporation is liable for filing the company's correct losses and profits. The shareholders are liable for filing their own personal income tax to include their profits and/or losses of the S-corporation, which is determined by the percentage of their ownership. The shareholder will then be taxed at their own individual tax rate. In some instances, this will allow the shareholder to be taxed in a lower tax bracket than the corporation. A S-corporation's profit goes directly to its shareholders. This means that all shareholders will share in the corporation's profits and/or losses. How does a shareholder know what their losses and profits are, you may ask? A shareholder of an S-corporation receives notice of their profit and losses through a Schedule K-1. This is a document typically given at the end of the year, just like a W-2. This form will help the shareholders file their taxes appropriately. A recommendation for Bears R Us would be to hire a certified professional employers organization, or PEO, to ensure that the company's profits and losses are being filed correctly. Incorrect filing can be costly to a business, and in some cases, they may lose their right to continue to file their taxes as an S-corporation. To help businesses, the IRS has established a certified PEO program. If a company hires a certified PEO and that certified PEO fails to fulfill its obligations, the company is not held responsible for the certified PEO's actions or failure thereof. Overall, a S-corporation is a good business option to keep in mind for Bears R Us, especially if they are looking for tax advantages or they feel they might have initial startup losses. However, they must remember that there are certain steps that must be taken for a corporation to be recognized as an S-corporation through the IRS, like filing a Form 2553 and having Articles of Incorporation. Additionally, one must keep in mind that once the S-corporation status has been granted, there are certain guidelines that a corporation must follow to stay an S-corporation, such as a S-corporation must pay payroll taxes and file quarterly reports. Owners must be paid a reasonable salary according to federal regulations. The greatest advice we can give is to do thorough research and consult professionals if you have questions to see if an S corporation is the best option for you. We want you to know that the S corporation is a superb business structure where all owners will share in the profits and losses based on their percentage of ownership. The IRS tax liability is based on the percentage of ownership that you have. The less of the business you own, the less taxes you will have to pay. The more of the business you own, the greater profits you can potentially take away. This is a great way to build a solid foundation for your business. Don't forget, to become an S corporation, you must file your paperwork at least 1 month before the tax deadline. This concludes our presentation. Thank you for listening.